Welcome to today's market report. European stock markets are seen opening higher on Thursday with the race for the White House still undecided, but investors seemingly embracing the upside of likely US policy gridlock. DAX futures traded 0.8% higher, CAC 40 climbed 0.2%, FTSE contract in the UK rose 0.4%. The fate of the US presidency remains up for grabs early on Thursday, although Democratic challenger Joe Biden appears to be narrowly ahead in two critical Midwestern states that could tip the election in his favor. This has prompted incumbent President Donald Trump to file lawsuits and demand recounts. That said, even if Biden is declared the next president, the prospects of the Democrats taking the Senate have dimmed, pointing to further deadlock, i.e. similar policies to those which have seen strong stock market gains since the COVID hit in March. A narrow win with no Senate majority means that Trump-era tax cuts may not be rolled back, at least not immediately, and fiscal stimulus, though likely, will probably be scaled back from what it would have been under a blue wave. A relatively small stimulus package is likely to put the onus on the Federal Reserve, which is due to announce its latest rate decision later today, to do even more on its own to support the economy, especially with the US setting a one-day record of over 100,000 for new coronavirus cases on Wednesday yesterday, according to the Reuters. Back in Europe, the Bank of England has increased the scale of its bond buying program for supporting the economy by a further £150 billion to £875 billion, while keeping its key interest rates unchanged as the country heads back to lockdown. In corporate news, ArcelorMittal will be in focus after the world's largest steelmaker beat expectations with third-quarter core profit, while troubled airline Lufthansa booked a net loss of €2 billion in the third quarter due to the pandemic-related slump in traveling. Oil prices fell Thursday, continuing the recent volatile trading as traders focused on a likely Biden presidential election victory and the impact that this could have on the complex. Crude prices jumped as much as 4% on Wednesday after official data showed US crude stockpiles fell 8 million barrels last week as Hurricane Zeta distorted market projections. Crude future traded 1.7% lower this morning at $38.47 a barrel. Brent fell 1.8% to $40.51 a barrel. Gold futures rose 0.7% to $1,909.90 per ounce. On the FX front, the GBP-USD pair rallied around 60 to 65 pips post-BOE announcement and shoot to fresh session tops around the key 130 psychological mark, albeit lacked follow-through. The pair extended the previous day's sharp intraday pullback from near two-week tops around the 130-140 region and witnessed some follow-through selling through the Asian session on Thursday. The GBP-USD pair, however, stalled its intraday slide and managed to rebound swiftly from the 129.30 area after the Bank of England decided to leave benchmark interest rates unchanged at 0.1%. The supporting factor to a larger extent was offset by a larger than expected increase in the size of the BOE's asset purchase program, which now stands at 875 billion sterling pounds, up from 745 billion pounds prior. Adding to this, the UK Central Bank also showed readiness to increase QE further if market functioning worsens and said that risks to the economic recovery remain skewed to the downside. The near-term outlook is clouded and GBP could trade between the two major levels of 128.45 and 132 for now. Unless there is further spike in volatility these few days, we should be able to narrow the expected range and have a clearer near-term view. Euro-dollar is set to test 115 to 120 range resistance as US election risk ease. The European Central Bank assuring more PEPP and funding support should reduce regional lockdown fiscal blowout risks, according to economists. In the October meeting, ECB has prepared markets for increases in their PEPP and potential for increased APP envelope, as well as potential further funding facilities and more attractive terms for TLTRO3 facilities. According to the UOB, Eurodollar could edge higher in the near term. On the shorter term note, 118.50 is already quite a strong level. The bias for Euro appears to be tilted to the upside, with 115.50 acting as a key support. The dollar edged lower as Joe Biden looked to be edging closer to winning the presidential election. The dollar index was trading at 93.312. This is today's market news. Thanks for listening. We'll see you next time.